Hello viewers, in this video I'll be going over Gold Miners Jr. ETF ticker symbol GDXJ. Today we are up 3% on the 1 hour chart. We are currently overbought on the RSI, and for the 4 hour chart we approach positive MACD and we are also overbought on the RSI as well. For the daily chart we broke out outside of the resistance, the 100-day moving average, so that's a positive sign that there's a reversal in play, and since we did not break down support, and this act as a real good support as indicated 1, 2, 3, 4, 5 times, dating back all the way to September 13 and back in November 26. So one could say this is a real firm support and one that could rely on support. So at the moment I'll mark that as our next, well, since we're above the resistance indicated back in last week, we broke above it, that could act as our next support. However, we may want to fill in the gap that was open between December 2nd and December 3rd. So that may be a possible gap to fill, and by the time that gap fills in, we will have the 9-day moving average approach to that price level of $38.22. And as for resistance, I do see a possible resistance that was distinguished back in September 24th. We do need to break that next resistance, and since we are slightly above the resistance back in early November, one could say that is the next resistance. So if we were to move on higher, that price movement is roughly around 3.4% to the upside, and to the downside is roughly 2.9% to the downside. So the forecast model is now in the link below, so do check it out for gold miners. And you can configure the settings and go over the models that I did not go over in the video, so to check it out. So back to the forecast model, I'll go day by day where Gold Miners Jr. will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to September 24th to December 19, 2018. So let me point out why these two charts are similar. So what we have here in the beginning of the trend, we start off touching the bottom Bollinger Band, and I'll just mark all, and after that we touch or revert back to the mean and touch the middle Bollinger Band. At this instance, after touching the middle Bollinger Band, we see sideways price action, and then right here we touch the upper Bollinger Band, and then that's the first instance where we touch the upper Bollinger Band. The last one is right towards the end where we are currently at the moment, and you start to see a similar pattern shaping here as well. We see a slight dip in between, so I'll just, in the trend in question, I'll just mark all the instances where we see it touch the bottom Bollinger Band and one revert back to the mean right here, not quite touching the upper Bollinger Band, and then right here we do manage to see that point established, and then after that we start to see another instance where we touch the upper Bollinger Band as well. So we see 1, 2, 3, 4 points. We also see 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was September 24th to December 19, 2018. Back then, Gold Miners Jr. was up around 7.5% or 7.3%. So I do see Gold Miners climbing higher in the next coming days. Again, this forecast model is now in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.